Have you ever wondered how come rich people pay very little tax? In this video, I'll explain how they do it and break it down in detail. In the 2017 to 18 financial year, there were 73 millionaires who earned more than $1 million in income, but yet did not pay a cent in income tax for that year. The number one strategy for this cohort is negative gearing. To simply put what negative gearing is essentially whereby a borrower purchases an income producing asset, and essentially the income from that asset is below the cost of managing that asset. So essentially it costs more to keep than more money coming in. So you're at a negative or a loss. Simply put it as that you are making less money than it costs for you to own that asset. So you're in a loss. And what this means is that let's say your taxable income is $100,000. However, you've incurred a $10,000 loss in your investment property. That means your taxable income now will be 90K. So 100K minus 10. So it'll be 90K now. I already have a video discussing negative gearing in detail, which is in my pipeline. So if you're interested and want a good explanation, please hit subscribe. Out of that cohort, 54 millionaires paid no tax because their income was below the tax-free threshold of $18,200, with the negative gearing being a popular option. To put in perspective the popularity of negative gearing, 1.3 million out of the 2.2 million landlords of Australia claimed that they had a net loss in their investment property. So that's slightly more than half of the people, which means slightly more than half of them are incurring a loss and are claiming negative gearing. But don't be fooled when you hear this. Yes, you're saving money on tax, but you gotta remember one important distinction, is that you're making a loss. And if your property does not appreciate capitally, does not provide good money, or it's just not a good investment overall, you are making a loss. Negative gearing is a tax strategy, not an investment strategy. I'll repeat once more. Negative gearing is a tax strategy, not an investment strategy. So if your investment is horrible, you will still be at a loss. So please keep that in mind. A further 19 millionaires earned more than the tax-free threshold, however, still paid no tax, presumably due to various offsets and rebates. And this is a video I want to make in the future, actually examining what the tax code is. So stay tuned for that. The statistics show that this group of people are quite generous, especially with gifts and things and donations that are tax deductible, which totaled over 1.4 billion, which is crazy. To put this into perspective, that is effectively 75% or 3/4 of their total income to their taxable income difference, which is substantial. The next point that I'm about to bring may boggle your mind a bit, as with the news, the media, they've always presented rich people in a negative light or connotation, especially in regards to tax and avoidance around that. So I'll bring up the table now. Here you can see taxpayer total income along with the number of people who do not pay tax. Here we have our number with 1 million plus being 73 people, which we're talking about now, that did not pay tax. However, if you pay attention, you can see that the lower we go in terms of tax brackets, the more people are not paying tax. This obviously makes sense. If they just negative gear like a big property, bam, they lost a huge portion. But the number of people who do not pay tax that earn between 100,000 to 150 is 1,069. And that's immense, but no one talks about this. And the reason why I brought this point forward is to really challenge your mindset, as this is truly, truly important. Many people focus on tax or the importance of tax. However, tax is not as important as you think. What rich people focus on is accumulating knowledge, assets, and just income, and just learning a lot more, because they realize that you can only save so much money, but your income earning potential is unlimited. Sure, it's important to save money on tax. I'm not saying that. It's very important to save as much money as you can. But if you focus on that and you focus on saving or like a scarcity mindset, you won't increase your income dramatically. So which is why I thought I'd bring this up, just so you can see what I'm trying to say and really challenge your mindset and make you sort of understand what I mean in terms of saving, because saving will get you nowhere. You've got to make more money. Another thing is deeply hate is when people talk about scraping negative gearing. In fact, they did this, I think in the 1985 or something, for like a year or two before they went back and they're like, nah, we're not doing that. So I'll pull up another graph on screen. On this graph, you can see the percentage of people who negatively gear in each tax bracket. And if you essentially add everyone below 180K and more, it totals to 38%, which is almost 40% or slightly less than half. And I hate the media always talking about, oh, you know, these investors, you know, these rich investors getting such big tax breaks. But these, I wouldn't say are ultra rich or rich people in general. These are just like upper middle class or just middle class as well. So that's one thing I thought I'd bring in this video as well, just around the concept of negative gearing, as we're already delving into it. In fact, as I was mentioning mentioning earlier, negative gearing was abolished here in Australia, I think around 1985, and they essentially flipped the legislation back after 2 years. What happened was the tenants, essentially, especially low socioeconomic areas, had increased rents because as the investors, average day people, maybe slightly a bit more, they could not sustain the property or hold it. So what did they do? Everyone increased their rents, and this affected single moms or just low socioeconomic people because they're already struggling to survive, and then you've added an increase to their rents. That's what happened. I have another table to show you guys as well, so I'll put that up on screen now. Here you can see the property investments an individual has, whether they suffered a net rental loss or whether they're neutral or profit. So we can see for 2017 to 18 financial year and 18 to 19 financial year. And here you can see that most newbie investors are actually the ones using negative gearing, like they're the ones suffering a net rental loss. And you can see as they go up the property number and they get more and more properties, it's essentially shifting more towards neutral or profit. So this is what I'm trying to illuminate. The rich don't get affected by this, and it's something you guys should understand as well. Like, sure, it's a tax strategy, which is good, save money, but it's just one area you're focusing on which is not important, or something you shouldn't even focus on because there's a limit to how much you can save tax. So I hope that point was helpful. Transitioning on, the second most popular way amongst this cohort was simply making extra contributions to their superannuation. See, super gets taxed at 15%. We know that. The concessional contribution cap, I think as of this date I'm recording, is 27,500. If you exceed that, then it goes to like 30% or something, but there's a lot more nuance to it. But essentially you pay less tax because it goes to super, as we assume, and it reduces your taxable income. So what that individual is doing is he's simply making extra contributions, and I presume an individual like that has a self-managed super fund which he's accumulating properties. And the reason why I'm saying properties rather than another asset class is because, did you know, a fun fact is with self-managed super funds, I looked this up, I did not believe it, I encourage you to check it as well, is that you can essentially get tax-free rent once you turn 65, 70, when you reach like preservation age. The money that comes from the properties in a self-managed super fund, like the rental, it's tax-free. How crazy is that? These are some things they're doing. And please hit like if you didn't know that, and definitely check it out. The third step, or the next step these individuals will do, is simply claim their gigantic tax management fees. Many people, I'm surprised, still don't claim tax management fees. This is something anyone can do, even yourself. So if you see a tax agent or an accountant for your tax returns and you're not getting their services essentially deducted for your next tax return, please do so immediately, because their services are something you can claim, which a lot of people surprisingly aren't doing, which is crazy. I don't have the number here, but I'll put it up on screen, but it's a crazy number. Around, I think like 30-40% aren't doing this. So please check this and do it. Now, I hope you can see that it's getting much smaller and smaller in terms of what they can claim. The big things were pretty much negative gearing, tax offsets and rebates, as well as gifts and deductions, and super. These were sort of like the main sort of things. Now it's sort of getting smaller and smaller. The next thing that I have to show you guys, or next things these guys do, is work-related expenses. I'll pull up an infographic on screen now, and here you can see that essentially a total of 13.87 million Australians filed tax returns in 2016 and 17. Yep, different financial year, but found the sick infographics. And these are the different types you can see where they spent or what they listed the income source. So salary, 60K, and 80% of that listed this as their income source. Bank interest, people got 1,242 on average, and frank dividends, which is 7,861. And along with the rental profits, which you can only see only 6% of the population who filed the tax returns claimed. Tips and allowance and other things. And I have another table or another infographic, which I'll put up on screen, which you can see essentially the deductions. So how much claimed rental loss, which is only 9%, and how much claimed uniform expenses, car expenses, and other types of deductions. And essentially what I'm trying to gauge or say with this point is that 64% of the people, Australians who filed this tax return, made a work-related deductions, and the average amount was 2,487. And for people who move above tax brackets, they put around 5,700 in terms of their management fees, which is crazy. Overall, I hope I did not bore you with this video and you came out of it learning something new. Maybe you learned about the cool self-managed super fund where you buy properties and you get tax-free back. Or maybe you learned about how negative gearing isn't so bad as they make it seem, and it's that actual average to upper middle class people do it predominantly. And hopefully that made you shift your mindset in terms of saving money to making money, as you can only save really so much. And if you're in a mindset of scarcity, you will not really gain the opportunities outside because you're always trying to hold what you have rather than see what you have in front of you. So nonetheless, if you enjoyed this video, please hit like. hit subscribe, and click on the notification bell icon so you get notified when I come out with a new video. As usual, I appreciate any feedback, any comments you guys have so I can improve the quality of the video. Thank you for watching. I hope to catch you next time. Bye.